Good morning and welcome back. Thank you so much for tuning in. My name is Kyla P. Barnes. I am your financial chef and coach. And today I'm going to be recapping October. I'm also going to be recapping what happened in September. I think that may be a little helpful. Today we're going to also be covering some new music. App Soul, Do Better, Makar Mood, King's Affirmation, and also Billie Eilish, You Should See Me in the Crown. So that's going to be playing in the background. This right here is Makar Mood. I ironically got this song from when I was in the gym last week. It was playing overhead, and I was like, "Ooh, that's kind of dope." Let me turn it up so you can hear it. Tell me what you think. Okay, all right. So you got a little bit of a feel for it. Again, that's on YouTube. Makar Mood is going to set us off today as far as what we're listening to. I always start my podcast with a quote. I think that's a good place to start. I also typically start with a greeting. So I've already done the greeting, but my quote this month is not from anyone in particular, it's from myself. And that quote I probably say is that in this life, you have to be yourself. In this life, there are so many messages that we hear as kids, that we hear in college, we hear in school. And I have found that it is important that you discern between yourself what message you're going to keep and other messages you're going to divorce. Ultimately, everything you were told as a child needs to be tested, or it needs to be returned. It needs to be something that you leave as you were a child. So as you grow into more understanding, as you grow into more responsibility, as you increase your territory and also your understanding, some things have to shift. So my quote is such that you have to believe in yourself. You have to divorce some ideologies that as you get older don't work for you. And it's also to be okay that beginnings hide themselves in endings. So I know some people hold on to not letting go of a thing, but that's probably what you should let go of so that you can move forward. And that's a quote from yours truly, Kyla P. Barnes, your financial chef and coach. As always, you can look me up online on www.onegingles.com. It's also going to be on the screen. When you look me up, if you have any questions, concerns, if there's some items that you'd like to review one-on-one, that's the time to submit those questions. That's also the time to let me know how I can help. Many times, as a coach, as well as a strategist and a financial advisor, we can send out a thing to our clients, but we don't necessarily know if it's going to be used or even if it's useful. So that's your time to just kind of give me a pulse check as far as how I can help. This video is recorded at the end of October going into November. November's my birthday month, and yes, I plan to have a really good time. I also plan to just live my life, right? I've been doing some traveling. I've been meeting some awesome people, and I have been increasing my understanding. I have been learning how to better get something with even less energy, sometimes even less resources. And I can cover that a little bit more in my newsletter or in a consultation if you like. Speaking of newsletters, the newsletter is also available on www.onegingles. The benefit of my newsletter is that I'm covering traits, I'm covering specific tips, I'm covering what I'm seeing at a macro level, what I'm seeing at a micro level. I'm also covering where's a safe place to park cash, or maybe even give yourself a little bit of a respite from all of the tumultuous gyrations in the stock market. So definitely subscribe to my newsletter. It's only $36 for 12 months. It's totally worth it. And just like with all of my services, if you find it's not helpful, don't pay for it. But I know that the information is helpful. I also know that if you follow suit, you're going to find many pearls that you can use. So a recap of September. September was a month in which the Great British Pound as well as the Euro fell lower. It was one of the times in which those currencies fell to my all-time low. Bitcoin remained flat. It's still flat currently at this time. The Fed did move the rate in September, 75 basis points. The very next Federal Reserve meeting is going to be in November. Yay, my birthday month. I have to keep putting in a shameless plug there. And they are expected, according to the street, Barron's.com, as well as MarketWatch.com and CNBC.com, they are expecting that the Fed is going to move about 75 basis points. That is going to put the rate even closer to the expected range they're looking for, which is about 4.3% to maybe 5.1% on the long end. A few things to remember should that happen. The camera's moving here. A few things to remember that should that happen is that you want to be in a safe place. A safe place meaning that you're comfortable with your allocations. You're also comfortable with what you have selected as far as a portfolio weighting, that you have maxed out on your 401k, if you can. And another thing that you want to make sure if the Fed continuously moves is that you don't put yourself in position to be taken advantage of due to market gyrations. And what I mean by that is that there are some sectors in which are more protected than others. We're still in the realm right now where if you are investing in something like large tech, it's not going to win you the day. It's actually going to cost you. If you're investing in something like heavy materials right now, that may not necessarily be something that is going to win you the day. It's actually going to take money from you. The sectors that are going to prove to be a little bit more resilient are going to be defensive sectors. They're also going to be sectors that can typically hide away from inflation. So what that looks like is, let me try to maximize this so I can read this for you. I actually captured this before the call so that I can share this with you. Right now in the business cycle, we're still in late cycle. This is the same thing that I mentioned in my previous video. Late cycle means that you're going to find energy, healthcare, utilities, consumer staples, and maybe sometimes material being positive. That brings me to another point, which is that so far on the year, energy is the only sector that's positive. At this current time, it's positive by 61% year to date. All the other sectors are negative. So that is really something to take into account if you're starting to build a position right now in any of those sectors I just mentioned that may be out of favor. Get your pencil out, pause the video, take notes. This should be informative to you, but there are some sectors that just don't perform very well at late cycle. There's also some sectors that do not perform very well at the end of the year and top of the year. And one of those is definitely sometimes, I can't say definitely, but sometimes it's information tech, sometimes it's financials, industrials, as well as consumer staples. Another thing that happened in October, GDP recently came out. GDP was resoundingly higher. It was up 2.6%. That's massive. 2.6% positive versus the previous quarter, which was Q2, was negative 6%. What does that mean to you? That means that just like you hear certain things, I'm going to turn this music down just a little bit. What does that mean to you that GDP is positive now, 2.6%? It means that there are times in which we hear things and we run with them without having understanding. A textbook definition of recession means that there's 2 quarters of negative GDP. Well, we've already had that for Q1 and Q2, but the Bureau of Economic Analysis determines if we're actually in a recession or not. And they said that we weren't in a recession. I also mentioned this in my previous videos because the numbers were so light. If you go back and look at the other times in which we had a recession, the numbers were definitely heavy. They were like -2, -3, -4%. And it did have 2 recurring quarters, if not more, of negative GDP. But we're not there yet. So that's going to be something to really monitor really closely. What else happened in October? Bond yields increased, of course, with the Federal Reserve moving the Fed up. Bond yields are increasing, which means that bond prices are falling. Savings accounts are so high right now. You can go online right now and get a savings account for like 2.3%. You can go to Amex, or you can go to Marcus, by Goldman Sachs. Discover, my personal favorite. No, they don't pay me to say that, but Discover has been one of those financial companies in my portfolio I've had for 17 years. It is a card that I'm proud to hold, and it's also a card that has paid me. Yes, it has. It has paid me in the sense of the cards have really good cash back. They have really good benefits that I can use as far as a consumer. Anytime I have wanted to maybe make a large purchase, I call Discover, and they will work with me to make that large purchase. Or sometimes I just want to, preload a trip, and I have a low interest rate there. So Discover is my card of choice. But getting back on topic, Discover savings accounts, online brokerage accounts, Schwab, Fidelity, JP Morgan are all paying really well as far as brokerage money market accounts, as well as online savings. So look into that. If you are a client who typically parks a fair amount of money in your checking, or maybe your savings at a bank, and it's only paying like 0.01 or 0.02, this is an excellent time for you to trade up. I know I've mentioned this in my previous videos, but you have to let people arrive at their own point of understanding. So hopefully there'll be enough proof in the pudding when you go to look at your statement and see that if you've parked 5,000, 10,000, 20,000, 30,000, sometimes even 50,000 or more, if they've given you less than $5, get rid of them. Okay. What other items should I cover? The Santa Claus rally. Sometimes that can be really pertinent as we move into the end of the year. Right now, we are sitting at the end of October, the top of November. The Fed's going to meet. We're in a rising rate environment. And you also have large tech companies like Google, like Amazon, like FedEx, FedEx would be more logistics, but you have larger information technology companies. You have larger financial companies who are meeting estimates. Mixed consumer discretionary, one of the 11 sectors, is kind of mixed. So if you have a stock that's in retail sales, just kind of brace yourself. Some positions that you should add to will be the positions that are already winning and that have really, really strong fundamentals. I cover with my clients at the end of the year that it's very important for you to review your financial checklist. This is the time for you to decrease your debt. This is the time for you to goal set for next year. Don't wait to next year to make a New Year's resolution. Do it right now. The time for you to look at what worked and what isn't working and what you would like to work is now. This is also the time that if you have any new ideas, deploy them. Deploy them. There is no bad idea out there until you try it to be a bad idea. Some of the most nonsensical songs and ideas are actually trending and have made people thousands, if not millions of dollars. So if you have an idea, if you have a concept, or if you just believe in yourself to go that extra method, to go that extra distance, I think you should do it. And now's the time to be able to do that. Other things that I'll cover in this video is, if you are an investor and you have losses that are in a taxable account, like a brokerage account, this is a very good time to deploy those tax loss harvesting agenda items. Tax loss harvesting allows for you to be able to sell something now, incur the loss, so that way it can offset your capital gains for future years. So that is something that many times towards the end of the year, as financial advisors, we do tell our clients, as a financial analyst, taxes should always be top of mind. And you should also, when you're going to place a trade in the future, realize what type of account it is in, and also have a plan to enter, have a plan to exit, and to have a strategy for your duration. That's probably some of the most solid things that I can tell you as we head into the end of the year. The end of the year is very paramount to me because I take a holistic view of everything I did, everything I felt, I experienced, as well as that I wanted to accomplish, I didn't accomplish. And then I really set aside time to vacillate or to just think about, was I supposed to do that? And also what I did that gain me the yardage I was looking for? So I ask that of you too, to just take this time towards the end of the year and make things count. Take inventory of these things. And if something is not working, don't repeat it again. Don't take that into 2023. Leave that in 2022. One moment. One other thing that I want to make sure that you are aware of is that a lot of my friends are in their 30s and 40s. I have some friends in their 50s, 60s, and 70s. Two of my best friends are in their 70s. And Nipsey Hussle, Tyler Perry, Oprah, Tupac, and there's another African American billionaire said that the thing about using other people's money is they control the rules. I'm saying that to say that if you are in a job, if you're in an industry, if you're doing something day in, day out, week in, week out that you don't enjoy, set a plan to set yourself up to get out and to do that purposeful thing that you're supposed to do. The end of the year for me is, while finances are top of mind, it's more about personal growth. It's more about mental health. It's more about the person as a whole, right? Because sometimes we can't get encouragement from the outside. We have to get encouragement for ourselves. And life is more than money, but it does help. It does help. So I have enjoyed talking to you today. Look me up online, www.onegingles.com. I know I said a lot in this video, but there's so much to cover as we head into the end of the year. November may also have its own set of struggles, so I really want you to be amped with what you can do to go the distance. I am your financial chef and coach, and I look forward to partnering with you for the duration of your financial journey.